Okay, well, before we dive in and we look at 2021 and what's in store with this fabulous panel of Delhi Sultans today, let's actually take a look at the year gone by. We've got corporate earnings back on track. In fact, they've surprised positively. We're almost back at pre-COVID levels. And we've witnessed a remarkable improvement in overall EBITDA numbers, in margins. So industry seems to be going from strength to strength. GDP numbers, as we just discussed, were also a positive surprise. Clearly, we're heading in for a V-shaped recovery, and there seems to be a lot of excitement in store in 2021. So Naveen, I want to start off with you. Now, GDP growth is expected to bounce back, as we just discussed. After an estimated 8%, we're looking at an 11% growth, a very strong rebound coming in. Do you feel that the kind of packages the government has announced, the kind of actions that they've taken on reform to try and kickstart things again, have been enough and have been in the right direction?
I definitely think so. Especially, say, I can speak about our sector, that is steel and power. So there used to be a perpetual shortage of coal. So in spite of having fourth largest reserves of coal in the world, we're still importing a huge amount of coal, almost 2.5 lakh crores worth of coal every year. So now with starting of commercial coal mines, I think that's going to become a past. There's going to be enough coal that we can produce in India, and the government will get a lot more revenue. There'll be a lot of employment opportunities for the youth. And now similarly, just recently, the MMDR bill has been passed. So with that also, we'll see a lot more iron ore mine coming in for auction, a lot more minerals. All sorts of minerals will get kind of freed. So and all these things are really, really positive and bold moves. And then privatization. I mean, I really believe that government should not be in the business. It's government's business not to be in the business. So with all the push on privatization and commercial coal mining, so I think it's all, and building infrastructure, these are all very welcome steps and steps in the right direction.
All right. Let me bring Sumant in as well. He's joining us remotely, of course. But Sumant, if you can hear us.
Yes, I can.
Yes, let me get you in on this in terms of really the impetus, the stimulus that's been provided by the government. Where are you at on that? Okay, I'll come back across to...
Sorry, Aabha, I just lost you for a second. Can you just repeat the question, please?
Sure. I was talking about the kind of stimulus measures, the policy reform that the government has undertaken in order to kickstart things, and whether you feel, particularly even post the budget, that these have been in the right direction and have already had a resulting impact, actually. I mean, how would you quantify that? Do you feel it's been enough? Would you have liked to see more? Where do you feel it's had the maximum impact?
Yeah, thank you so much. So, I think that as people say, a crisis forces the mind to think more clearly. And I think what the COVID crisis has done is that it has actually sort of got the government to think about really taking more bolder steps and taking steps that I think in the long run will have a significantly positive impact for the economy. And so the first thing I think, of course, is the strong focus that we had on fiscal deficit containment. That is something that they've put on the side, and they've said, you know what, we're going to actually have a fiscally expansionary budget and use that money prudently in a number of areas, and I'll talk about what those are, and really go for growth. So I think this mentality shift of really going for growth is something that is at one level very positive, and it marks, I think, a big shift from the fiscal sort of prudence oriented strategy that we had earlier. So the question now, of course, is this extra money, where is that going to be spent? And clearly there are a couple of things that they've announced. First of all, this whole issue of the PLI scheme, the building out, the production linked incentive scheme to encourage manufacturing in a number of different sectors. I think that will be very positive in kickstarting growth in a number of manufacturing areas. The second really is investments in infrastructure, again, allocating more capital to road building, railways, and so on. So I think all of that, again, will have its own multiplier effect as infrastructure build out begins to happen. So I think there are a number of things that they've done just in how this money will be used, this extra money, to actually focus on and push growth. And once that begins to happen, it will start leading to demand creation across a wide swathe of the economy, and will hopefully therefore lead to these 11 to 13% growth numbers for the coming financial year and then hopefully we sort of sustain on a higher trajectory after that. The other thing is they've also taken this opportunity now to make a couple of other fundamental shifts in philosophy. The issue of privatization, the issue of denationalizing the public sector banks, coming out of this issue of strategic PSUs in certain very specific sectors. I think those are also very significant philosophical shifts on the part of the government. And I think what really will likely happen from all of this is that we'll create a structurally sounder economy that hopefully will have legs for longer term sustainable growth. So after the 11 to 13% next year, hopefully we continue to get back onto a growth path that is maybe 7 or 8% or higher. If you recall, we'd gone down to about 4% or thereabouts in the couple of years leading up to the COVID crisis. And the hope and the expectation would be that now we'll get back into a higher growth trajectory after this.
Okay, fantastic. So that sets the lay of the land. On consumption, and Ajay, I'll come to you. You already know what to expect. But I'm curious, yours has been one of the sectors that have been hardest hit.
Yeah.
How do you see the bounce back? How do you see the recovery for you?
Obviously, this is something which nobody has ever experienced before. But I am a little skeptical when people use the word disruption very loosely, because disruption is destruction, according to me. I think its life is interrupted for some people and disrupted for some people. Obviously, who've lost their loved ones and have been impacted by this pandemic, my heart goes out to them. But at the same time, there are some activities which have got impacted, and that's an interruption, and especially in a market like India, where people love going out and watching films. Secondly, just human nature. Human beings are just social animals, and they have to go out. And you can't judge half a life that we are living with the half the world that is open. I think so when the world is going to open, the pent-up demand for people to go out, we are not designed to be incarcerated, is just huge. And, to stay at home. And India makes, why I like India as a market, as opposed to other markets like US and England and Australia, which are very badly hit, of my industry I'm talking about, cinema exhibition industries, because they only make about 100 films in a year. India makes 1,800 films in a year. Right. And we sell about 1.45 billion tickets in a year. Last year, the world, till March 2015, March 15, 2020, had 6 billion tickets sold all over the world. $42 billion was the box office collections. So none of these OTT platforms, which is probably what you'll allude to later, can compensate for the kind of theatrical economic rationale which is there. 70% of the revenues of any content that gets created still comes from theatrical. So there's an aberration, and I'm a long-term believer in the market, long-term believer in the business. I think when the pandemic gets sorted out, and people will bounce back, the sector will bounce back. And I'm not saying it as a self-fulfilling prophecy. Right. I'm saying it because I do actually believe we are not all designed to stay at home. We have to go out.
You have been very optimistic, Ajay. And, we've seen that in the kind of plans you've announced and the forward-looking, plans that you've also discussed. But tell me, does the fear of a second wave throw a spanner in the works there? Are you concerned? Is it real? Is it an evolving situation? Again, I ask because coming from one of the industries that's been worst affected, you've really come out of the worst year possible, right? And even if you're optimistic at the moment, can this derail your plans?
Of course, absolutely. I mean, as I said, humanity, I'm not going to be that myopic and only think about my industry. Humanity matters to me more. So, of course, if the second wave comes, or in the Europe and US, the third wave they're talking about, it is bad. It's bad for everyone. So, first of all, normalcy has to return, where people feel safe going out, the pandemic comes under control, then I'm just a subset of everybody feeling safe and happy, and then we'll bounce back. But of course, it concerns me.
Okay, we'll come back to that again in a moment. Mr. Mittal, on one hand, we've seen tremendous growth, of course, in digitization and the way people have been communicating. On the other hand, on the business side, there's been somewhat of a loss of reasonability in the industry. How do you see things evolving as we move forward?
My industry, I have to say, is probably one of the favorite subjects of this government and also the Prime Minister. And as an industry leader, I can tell you, the industry has been, we can talk about numbers and figures, those matter, those count. But we always have been looking forward for the government to stand up and say that wealth creators will be respected. Industry making profits is a good thing because that's how the job creation will happen. And from an industry point of view, it was actually a great endorsement from the Prime Minister on the floor of the House to say, we will respect you. Having said that, and we have seen how people have been working from home, people have been locked in, the entire telecom and the digitization program of over the last 20 years, I have to say, has really held this country in a very good state. And I believe while this industry has gone through many avatars, but this has been the time where I think India has been connected really from one end to the other end. And I can tell you I have live experiences where people have used technology for healthcare, and we've seen education, how people have been taught at home, and of course banking. So really speaking, this has been the bridge to all that we've gone through. And I'm hoping that this pandemic must end. It's not about the industry, it's about people, and I'm hoping that the second wave does not happen. People need to be vaccinated far quickly than what we are doing. We're a large country, large population, and we have to be careful. And keeping that the global indices are down, is going to reflect on us. While we can say the FDI is coming in, but I really need to figure out between FDI and FPI money coming in, as you know, and hopefully with all the Aatmanirbhar and all the PLIs, what Sumant also alluded to, I hope. And keeping the geopolitics in mind where China is today versus us and globally, it's a great opportunity for India to raise the manufacturing bar. We are at about 16% to 17% of the GDP. Any economy must have about 25% plus on manufacturing, about 50% industry, and then agriculture. That's the kind of mix that we would like to see. And it's a great move from the government to say manufacturing must be progressed.
Okay, that touched upon a lot of important points. Naveen, we've also seen the return of core sectors, and look at where steel is today. Prices are once again at a high, inventories at a low. It's an ideal situation. It's almost too good to be true. Do you see this lasting? Is it a 12 to 18-month phenomenon? Is it a longer-term structural change?
Okay, that's a very difficult question to answer. A lot of people do answer that. They say, I believe Mr. Jhunjhunwala was here this morning, and he spoke about like next 5 to 8 years is supposed to be very good for the steel industry. But we as a steel producer, we don't think like that. We feel that we have to be so good in producing steel or power or whatever we do, even if the industry goes down, we should be the last company standing. We should be so efficient, we should be so good in what we do, because we've seen this, industry goes up and down, but few stars are always there. But since you spoke about the industry, I do feel that in India especially, our per capita consumption is only 75 kg per person per annum, whereas the world average is more than 220. So this per capita consumption would definitely, with all the estimates and the quality of life improving of the people, we feel that in the next 10 years, this will go from 75 to 160. So that would mean doubling of the steel production here. So that's why we feel there is a good future for steel and also power. Our per capita consumption of power is only 1100 kilowatt hours per person per annum. That's like 3 units per day per person. Whereas in the US and Europe, it is 10 times more, 15 times more. So so if we want Indians to have better quality of life, then everyone must have electricity. Everyone must live in a home. We must have good infrastructure. And these are the basics, electricity and steel, that go into building the infrastructure and improving the quality of life. So we feel that in India, because there's so much dearth of these things, that, so much needs to be done. So there's going to be good demand in the medium term.
Okay, well, talking about power, Sumant, let me bring you back in as well. And, you're in a segment where, of course, there's immense disruption. Solar, EV, they've become buzzwords, in the last year or so, more than ever before. Talk to us a little bit about the changes that you're seeing there.
Yeah, thank you. So look, there are immense, as you said, immense changes taking place in our sector. And I think we're living through what you may say is almost like a once in a lifetime kind of a energy transition that is happening around us. And, Naveen mentioned some numbers on per capita consumption of power. The reality is, like everything else in India, our per capita consumption is very low in power. and it will double over the next 12 to 14 years. But within that doubling, there is this big transition happening from conventional power to renewable energy. And so renewables is going to grow significantly faster just to basically take advantage of this growth opportunity. And given its cheapness at this point in time, it will become the default choice for the future. And the Prime Minister, as you know, has set a target of getting to 450 gigawatts of renewable energy by 2030, up from the current installed capacity of 90 gigawatts. And that means a 5 times growth in the next 10 years. But interestingly, that means an addition of 360,000 megawatts of new renewable energy capacity, which is equal to almost equal to India's entire power sector installed capacity from all sources at this point in time. So we're talking about a really, really sizable and significant investment plan just in renewables, and then the attendant investments in transmission infrastructure on the distribution side. This is going to end up being at least $500 billion or more investment opportunity just in India over the next 10 years. And then, there are, of course, attendant transitions happening or revolutions happening in the other areas of energy. For example, you talked about electric vehicles. Today, mobility consumes almost a third of the total energy that is consumed globally. Another third is consumed by industries. All of those also have to move towards cleaner sources eventually. And there are now changes happening on the hydrogen front and so on, which will start blurring the lines between electricity and energy. And that's when you'll start really seeing renewable energy, for example, getting into a lot of these other sectors through hydrogen or through batteries and so on. And so this is actually going to be a very intense era of growth. And a country like India has taken the lead in this area, and that's really terrific for us. We are now looking to get into manufacturing, and we'll be one of the 2 or 3 largest markets in the world. And there is an enormous opportunity for India to become a global leader in this sector, and not just let cede ground to China in this matter, but actually compete and be another source of capacity addition, equipment, and so on for the rest of the world. And I think that's the opportunity that we must seize at this point in time.
Mr. Mittal, coming back to you, there have been a lot of experts talking about how India is on verge of a digital super cycle. I want to understand how industry is preparing for that. Is it about AI? Is it about evolution in terms of how we're using some of those digital platforms? Do you also see things shifting in favor of the shareholders vis-a-vis some of the lowest tariffs that we're seeing at the moment? What are some of the key challenges and shifts that you see in the sector?
In a way, India is at a very sweet spot as far as digitization is concerned. Of course, we have a lot to do. Much more investment needs to go through. That's a given. On AI, we are, to be honestly speaking, as the situation stands, India is rather weak. We don't have patents. If you really see, and the way China is moving on AI, and as the global system gets connected, we should be worried. So we need to really invest on that part. On the other side is the infrastructure part, which is the advent of 5G. We've been struggling. We've been telling the government that if the maximization of revenue is not the core mantra, the pricing of the spectrum, the levies on this sector is far too huge. So till the time spectrum, and we've seen 2 failed auctions, and we will see another failed auction if the spectrum price is not addressed. So government needs to address the 5G spectrum pricing, give us enough spectrum, because that's also been a challenge for the Indian telecom companies, so that we can connect the dots. And we have seen how digitization is helping to the furthest corners and to the really the bottom of the barrel, if I may say. That's the kind of span that it comes through. I'm not too sure if India is ready for robotic surgeries as yet. We don't even have healthcare in the deep down rural areas. We don't get doctors. It's going to be a challenge. I doubt very much that we will have self-driven cars here with the kind of chaos that we thrive in. So it's going to be a little challenging. But there's so much to be done for defense services. You need to be connected. For satellite communication, we need to be connected. There's enough scope, and India can actually be really the platform for the world to create products, services at a pricing, and then we can be across as a global leader.
Fantastic. What about demand, Naveen, employment, some of these segments, and what else you feel can be really done to stimulate both demand and employment going forward?
Okay, so of course demand is very important. And certain sectors, the demand is okay, but obviously certain sectors we know are very adversely impacted, interrupted because of there's a good word, interrupted rather than disrupted, which Ajay just told us, because of this pandemic. So I hope that this pandemic is a thing of the past soon, maybe in the next 6 months. I am very optimistic with all this vaccination happening and herd immunity, etc., etc. And we are also starting to take a lot more care. So demand, obviously, so there's no one solution for everything. So every sector, you know, there have to be steps taken. But say, like I said, in our sector, a lot has happened, like commercial coal mining, new MMDR Act, etc. But generally for demand to increase, I think banks have to play a more proactive role. You know, banks, because of the RBI's policies and all the things that happened in the past, because of the banks burning their hands, fingers, many places, I think they have become too conservative. And now people are also very averse to seeking loans. So obviously for demand, there has to be money. Money has to come from banks, because India especially is a bank-led economy. So the banks, India being a bank-led economy, but still they follow the policies of the West. They pay too much attention to companies' ratings. If a company has an impeccable track record, but just because of the industry or whatever, the rating is not good, they would charge them a higher rate of interest, etc. So the companies also become more risk averse. They do not want to borrow. So if you want demand to be there, the banks have to, you know, again, play a very important role and start lending again, because they are in the business of lending. And that's how the demand will be then. Automatically, there'll be an impact in the entire industry and the economy.
Ajay, you know, we touched upon this earlier, but everyone is really curious.
Yeah.
You know, with the onslaught of OTT and the huge shift we've seen to digital, again, it's a relevant question even for your business. Yes, India is a country where everyone enjoys the experience. Yes, we're expanding to tier 2, tier 3 towns. There's a component of F&B, of course, as a part of the overall experience. It's not just content, but still, how are you gearing up for the kind of challenge that OTT platforms will pose?
See, one is experiential, one is utilitarian. So I think I come in the experiential space, and because everything was shut, therefore there was no choice but to be at home and watch OTT platforms. I was speaking to Uday Shankar, Disney's ex-head, and a few more people in Netflix. There was no content which was getting shot either. No films were getting it. If you remember the first 3-4 months, forget about content which is long form like TV shows or movies. Even sporting events were not there. The world was completely shut. So therefore, they had no choice but to buy whatever content was still available and had to be released theatrically. The theater guys, the film fraternity, they were also, India's got a mom and pop and son type of film fraternity. It doesn't have studios like you have in the US. So 4 studios are there. They've got the holding power. Here, if they make a movie, it needs to be immediately monetized. They can't wait for too long. There was no visibility when theaters will open. So suddenly, they were making these transactions. The OTT players were buying movies, the film fraternity was selling movies, and people were consuming at home. It was a huge aberration. Now, when I talk to the same people, suddenly the rates at which movies are being bought have come down dramatically. Even the film fraternity is seeing some visibility of theatrical coming up. So they want to wait for the movies to get released first, because again, as what I said earlier, 70% of revenues still come from theatrical. So the whole monetization journey of any content that gets created is far more if you release it theatrically first, then the word of mouth people get to know. Word of mouth, when the OTT players get to know, they know how much they should bid for the movie or how much it did. So it's not like a blind chal, for lack of a better example or a word or phrase. It's something that they know this movie, it doesn't matter if it had a big star, it didn't do well. So they're not going to pay an arm and a leg. Or it could be a sleeper hit, a very small movie which did very well. So word of mouth and the revenues, all that, then they can gauge how much they should pay. So I believe water will find its level when everything opens up. It's not a binary discussion of either and or. Both have always coexisted since the 1920s to now. We've had the Spanish flu, we've had the pandemic, World War I, World War II, Great Depression, everything. And the onslaught at home was far more than it is now. We had TV, we had color TV, we had multiple channels, we had VCR, we had DVDs, we had LDs. So many things were there. But people were not like robotic, that I'll only stay at home or I'll only go out. People will continue to do both things, even after theaters open. You can put your feet up and say, I just want to watch a long-form Game of Thrones type TV series, or today I want to get out and watch a film. So I think just now it's very accentuated and pronounced, the OTT position. But again, as I said, when things come back, both will coexist. And I don't mind OTT players at all, because the money is flowing back into and I'll give you small mathematics, I won't take too much time. 11,000 crores was the overall box office collections of India. 5,000 went to the cinema operators, and 5,000 roughly went to the film fraternity. Yeah. The total acquisition cost of all the movies that have been bought is not more than 1,000 crores. So net, the film fraternity still loses 4,000. Wow. So therefore, the maths doesn't add up. There's too much money to be left on the table if you go straight to OTT platforms.
Okay. Those are some great numbers to know. We're almost out of time, but I love the chemistry on this panel, because it just shows you what we're heading in for in the next decade. Optimism despite everything, renewables, we've got steel coming back, power on a roll, and of course, agenda. Rajan, just before we close, SMEs are also a huge backbone, and as SMEs, and as an industry leader, I just want to get a note from you on that part of industry and how you feel they're also coming back. Do you feel enough's been done to support them? How do you see them being instrumental in the next decade?
You've raised a very pertinent question. SME is really the backbone. If you really see our economy, that what we are, and if you're going to move to the ladder for the next year, I'm hoping that this is behind us and we will move to 10, 11%. Without the SME bit, this will not happen. Yeah. And what Naveen said, rightly so, the banking system actually needs to support them. Government is fully supportive of the SMEs, that we see that. I'm wholly hoping, and we've seen the budget which was now passed yesterday, is enough for SMEs on the table. Execution will be the key. If we have to grow in the double digit, and India as a nation has to grow double digit, not for next year, but many years, if you have to, come through this poverty elevation, as we call it, and we have to, link in everybody, it's a double digit. That SME has to play a very important role.
All right, on that note, I'd like to ask for a big round of applause for our fantastic panel today. I think we're definitely going to reform, perform, and transform. Thank you so much, gentlemen. Thank you.